Hi there, and thanks for tuning in to Countdown, the last 30 minutes of trade left. As usual, viewers, while we'll ask for queries, if you have some queries, do log in and try and give us your queries as well. But let's start with a quick snapshot of the markets. I won't take too long. We'll get to our guests in a bit. But I must say, the standout trade of the day has to be the recovery in the oil marketing companies and how well they have recovered. So do watch out for all of those names. However, the indices 0.5% higher, Bank Nifty 1.6% higher. There is stock and a lot of chatter amongst various market participants about some bit of a package imminent today or tomorrow. Maybe that is why the markets are doing what they are doing. Let's wait and watch if that continues. Mahindra & Mahindra 4.5%, 5% higher. Bajaj Finance nearly 5% higher. There is strength in HDFC Bank 3.5% higher. Bharti Airtel at 546. ICICI Bank, Adani Ports post that not the best of quarters, but up about 2.5. There is strength in HDFC as well. So a clutch of those names doing well. What's not doing well is ITC. I reckon Axis Bank is the other one which is correcting a bit simply because of two factors. One, could cigarettes come under some bit of stress after what's happened to liquor, plus that stake sale that could happen both on ITC and Axis Bank. Keep these stocks a bit subdued. HUL is down about 1.5%, so another 30 rupees. Could there be a block deal soon? That's the key question. And large cap IT is correcting, even though mid cap IT is actually doing well post NIT Tech's numbers. So Infosys and TCS have a spot of bother. Now, some individual names, 3 or 4 names that I do want to highlight in today's trade. One of them has to be NIT Technologies, 18% higher relative to the circumstances. NIT Tech, very strong commentary. Very good results, up about 18%. Persistent, but 7% after the numbers. Some of the fertilizer names, the likes of Deepak Fertilizer, are doing well. And real estate has had a bit of a bounce back day today, you would have to say. I think this whole belief of a package coming out has led to all NBFCs and real estate. So JM Financial, Oberoi Realty, M&M Financial, Equitas Holdings, Shriram Transport, all of them doing rather well for themselves. So good going, good strong moves there. Let's wait and watch if these last in trade. Let's get in our experts on board. Start off with Amar Singh Johnson right now with his thoughts. Amar, good having you. Thanks for joining in. A bit of a recovery day today. How are you playing the next half an hour? What kind of trades on the index would you take home?
Yeah, looking at the index, we are seeing that the index definitely, technically looking from a short-term perspective, the index continues to be strongly supported around the 9,000, 9,100 mark. So ideally, any dips towards those levels will be used as a buying opportunity. But on the same time, what we are seeing is that sustaining above 9,450, 9,600 zone is something which the index is finding it difficult. So it's a very good trading range for good play and short-term play, because the medium-term and the long-term indicators, technical indicators, continue to be extremely weak. So effectively meaning is that higher levels will definitely be sold into, and that's what we've been witnessing for many days now. But as I said, it's very good for the traders market. So any pullback should be used as a buying opportunity. But on the upside, as I mentioned, towards 9,450, 600, that could be a profit booking zone.
Okay, so maybe at a higher level, slight bit of a profit booking zone. So keeping that in mind, what are the stocks that you are trading today, Amar?
One stock is from the pharma space, and that is Divi's Laboratories. What we are seeing here is that if you look at the long-term trend for this stock continues to be extremely strong and positive from a long-term perspective. If you look at various time frames, it did correct somewhat, but that was, I would say, a healthy correction. And again, if the stock is on the daily charts moving from oversold, almost oversold territory, so there is a good possibility that the stock could trade higher. So any pullback in this stock towards, it's currently around 2290, so any pullback towards 2250, 2260, I think that can be a very good level to enter the stock, with a stop loss of 2183 and a target of 2393 on the upside. And the second stock which I would like to talk about is Tech Mahindra from the IT space. What we are seeing here is that the stock seems to have formed a bottom, and some of the technical indicators from a short-term perspective, they are positive, and while at the same time they are in oversold territory. So that really shows that the downside seems to be limited for the stock. And even on various time frames, be the weekly or the monthly charts, the stock is in oversold territory across major support zones. So this is one stock one can look at. So any pullback towards 495, 500 odd levels can be used as a buying opportunity. The stop loss of 483 and a target of 527 in the short term.
Okay, so watch out for those two names. Just one quick follow-up question before we get in Yogesh Mehta in the conversation as well, Amar. Bajaj Finance was looking weak today on open. Almost everybody was saying it's a short. It's bounced back very, very smartly. What should traders do here?
See, Bajaj Finance, see, on the medium term, if you look at the medium term, long term trend, the stock is weak. But on the daily charts, the stock is not weak at all because there's bullish divergence on the daily charts. And also some of the indicators are clearly displaying bullish divergence. So it effectively means is that the stock seems to have formed a bottom and it could rally towards sustaining above. The key level for the stock is 2130, 2140. Because if that level is taken out, then the stock can rally by almost 5 to 10%.
Well, let's wait and watch if that happens. Viewers, keep in mind, I think NBFCs and banks are up, and NBFCs in particular, because like I said, there is this expectation of maybe some package coming out, as a result of which the NBFC space is certainly up and about. Yogesh Mehta joins in fundamentally to talk about his thoughts as well. Yogesh, good afternoon. Thanks for joining in. If indeed there is some bit of stimulus given, MSMEs or otherwise, or maybe this moratorium, etc., do you reckon there are legs to this NBFC rally, or this will get sold into?
Neeraj, good afternoon. If at all there is any package by the government for at least MSME and the small sector, small enterprises, I think NBFCs can have some legs from here because already they have been beaten down because of the NPA concern on the slowing down of the economy and the jobless jobless people are increasing to 27% right now in India. So that is a threat of having more and more NPAs into the books. So probably this will have some post moratorium period. I think further extension or any kind of MSME package will have some relaxation for NBFC for the time being, at least not on a permanent solution, but at least we will have some bottom prices are there which have corrected from almost 40 to 80%. So here there is some chance of opportunity where one can look at getting into. And yes, there could be a 20-25% upside still remains there due to this package rumors.
Okay. So watch out. There could be some upsides. Mind you, one is package. The other is if there is some bit of a moratorium extension, something that Vishy was alluding to this morning, and I would urge viewers to look at that story as well. So those are things that you should monitor. The other one, fundamentally, Yogesh, is the kind of move that we see in Bharti Airtel. Now, we don't know if there is a deal in the offing. Yesterday, we had the head of research of SBI Caps saying that it's a matter of time before some global giant or some large FMCG company will partner with Bharti, because there is only as much option available within the Indian telco space to partner with, and therefore that's one stock to monitor as well. Are you bullish on both Reliance and Bharti Airtel? Fundamentally, why or why not?
Yeah, number one is Reliance now getting from oil to data giant. So that is one, and the new investment is coming through. So their ARPU is not increasing in Geo, but still 130, 131 is fine. On the other side, Bharti Airtel, where equal market share is bigger enough, and that can be a strong competitor for Reliance Geo. As far as the rumors are concerned about the murmuring of one of the giant who will be looking at partnering Bharti Airtel, even if that doesn't happen, then also I think that Airtel has got their ARPU well in place, and though they don't have any plan for debt reduction so far in near future, but if at all that happens, then there is a significant upside would be there, because on the valuation front there is no it cannot be measured on P multiple or EV to EBITDA level, because so far it is on a negative side and high P. So I would say that any positive uptick into this, because everyone is seeing that data is the need of an hour right now, and that is gonna be there. So I think upside would be there. Downside is limited in Bharti. Anything between 530 to 480 would be a good level. And I'm looking at in a longer term, maybe halfway down the line, 650 to 700 as a price target.
Okay. The other set of stocks which have done rather well for themselves, aside of banks, of course, and NBFCs, is that uptick in autos. Now, you never know, if there is some package rural focus, then maybe some of these tractor players could well be in focus. So M&M is highest again on the index. There is some talk of some fund flows happening within the within escorts as well. So watch out for the tractor players. They could be interesting ones to monitor today. Yogesh, ITC down about 6%. Is it a factor of the belief that maybe cigarettes could have some special taxation as well? Or is it just purely this government stake sale news that has spooked the stock?
Neeraj, it could be both because number one, the way we have seen that the sin tax introduced further due to this COVID-19 on 70% on liquor. So probably it may come to the cigarettes as well. So that is number one threat. And the second, the UTI SUTI stake sale, which is now is getting more and more intense as the government has got challenges to come up with the fiscal deficit numbers. So these are the both are the reasons which are equally playing negative for ITC. But as we have told, we have spoken earlier in the conversation here that around 140 to 150 would be a good. So far it was but 140, 150 would be a good level for ITC. Even there is a SUTI stake sale happens, then these are the decent levels that can be looked at as a investment portfolio for considerable long term rather than looking at a short term way.
Okay. So keep that in mind. Actually, technically, Amar, how does ITC look like?
Yeah, looking at ITC, what we see here is that the stock continues to be in a bear trend because looking at the long-term charts and the intermediate-term trend also clearly shows that there is weakness in the stock. But I would say the recent lows which the stock had made in March, so somewhere around 140, ideally that's a level of support for the stock. But on the upside definitely seems to be capped around 200 odd level. So it could be a range play for the stock with a negative bias.
Okay, I mean, do watch out for, viewers, the thing about a business like ITC is that the bread and butter business is coming under pressure. It's not that the FMCG businesses haven't faced issues. HUL is a prime example. And there's this overhang of the stake sale, as well as what if there are additional duties levied, the way they've been levied on liquor, will be levied on cigarettes as well. And therefore, there's only as much price elasticity that cigarettes have before a point of time when it runs out and it impacts demand as well. So, which is why I think ITC got in a bit of a storm, really, in the session today. Watch out for HUL, by the way. It's 2005 now. It's trading at the lowest point of the day. There's a lot of talk of maybe the block deal by GSK imminent, and that might have an impact on this stock as well. So it's something that you have to bear in mind when you're looking at Hindustan Unilever. That stock is certainly correcting and trading at the lowest point of the day. What is not corrected, and I think that some of these insurance players have bounced back very, very smartly. ICICI Pru is up 5% today. HDFC Life about 3.5%. So the going seems to be very strong here. Yogesh used to like them earlier. Yogesh, do you still like them?
The insurance companies?
Yes.
Yes, definitely. Post looking at SBI Life number, I think it would be a flattish quarter for Q4 quarters for all the players. And the way ICICI Pru has shown good recovery, Q1 could be a subdued one. But overall, there is no other option there is any substitute left for the insurance products. So one has to do that. So I think though the valuation multiple are high, HDFC Life is more on a higher side. But those which are available to the moderate way, like Bajaj Finserv with the holding company and ICICI Pru at current level also, and SBI Life, these three would be a great opportunity for investor to lap up the stock at least for next 3-5 years. And these intermittent headwinds would be there because of the COVID-19 turmoil, but over a period of time it will be a smooth sail.
Okay. Now, by the way, keep in mind, I mean, there's some news bits about maybe the SUTI stake sale not being on the cards as well, and that could have a bearing on how both ITC as well as Axis Bank do. So you have to bear that at the back of your mind. So keep these stocks in focus. Both ITC as well as Axis Bank, they could well have an interesting outing in the next 15 minutes. But what our dealing room is recommending in the session today, Darshan Mehta Johnson with his channel checks. Darshan, good afternoon. What are you learning?
Hi, good afternoon, Neeraj. I think one of the stocks that's been spoken about today is HDFC Life. And today, if you see, the entire insurance space has done well, be it SBI, ICICI, or HDFC Life. But in particular, there are two factors. I think technically, if you're looking at it, some of the charters did indicate that it looks stronger on the verge of going above the DMA. But the more important point is dealing rooms do indicate that it will be in focus ahead of the MSCI revision that will happen on the 12th of this month. So they believe that the weightage of HDFC Life will probably increase significantly, which could lead to significant amount of inflows coming in. So that's one of the counters that's been spoken about. M&M Financial is the other one. Today, NBFCs as such are doing well. Obviously, the pending package or the stimulus news always goes around in dealing room, but dealers did indicate that a couple of large domestic funds have started accumulating M&M Financial, mainly on account of the rural theme that they believe since the economy has opened up, they believe that at least on the rural side, there could be pretty much some bit of traction that will come in. And finally, Jubilant Foodworks is something that dealers are talking about. There was this Morgan Stanley note that came out in the morning with the target price of 1900. Some of the foreign funds are active buyers, and the note made a lot of sense in terms of, they highlighted how once the economy is opening up, the preference for QSR will definitely increase compared to going to restaurants. So the theme-based note pretty strong, and some of the foreign funds have been buyers in Jubilant Food today.
Okay, we will watch out for Jubilant Foodworks as well in trade. By the way, a few minutes ago, about 13, 14, 15 minutes ago, remember, SBI agreed to extend the benefits of the moratorium to NBFCs on a case-to-case basis. Of course, they'll have to submit proposal with financial details to seek the moratorium, and it'll cover any payment defaults between March 1st and May 31st. So some positive news for NBFCs. Anyways out, and I reckon maybe that's why some of these NBFCs are doing well. So Yogesh, one part of the news is out. I missed it at 3. It just happened about 11, 12 minutes ago. Actually 3:02 or 3:03, just when we started the show. Any thoughts here, Yogesh?
Can you repeat it, what we missed?
SBI has agreed to extend the benefits of moratorium to NBFCs, Yogesh.
Yeah, then it will have a little bit of positive impact for at least the NBFCs right now, and moratorium extension by SBI itself would be a good at least a balance sheet would be a better for SBI. Nevertheless, the amount would not have been more, but at least whatever has been saved on the balance sheet side, I think at around 170 level, then SBI would be in a better position. At least there will not be any hit on the balance sheet then.
Okay, I'm just very, very interested in seeing if Axis and ITC are indeed reacting to this piece of news. It's source-based by, I think, one of the media houses, but do watch out. ITC, no, not really. Even Axis Bank continues, I think, to remain under a bit of, well, actually, Axis has moved into the green, maybe. Yeah, I think Axis has moved into the green. ITC stayed lower, but Axis Bank has certainly moved into the green, about 392. Amar, you want to come in with a quick chart check here on Axis Bank, the intraday?
Yeah, I would say Axis Bank seems to have formed a short-term bottom, and 370 should hold up. But on the upside, the stock could meet with resistance around 400 to 410. But from a short-term perspective, there could be an upside to Axis Bank towards 415, 420 levels.
Okay, let's get in some viewer queries going, and we'll also get in our other technical expert on board in just moments from now. But first, some viewer queries. Prabhakar Roy is asking for a fundamental view on ICC. Prabhakar, I think we just spoke about ITC some time back, so I hope you got your answer. If not, just try and rewind and hear out what Yogesh had to say when it comes to ITC. Anand Kumar is asking for a view on Titan. Yogesh, we'll make this quick because there are a bunch of queries. Any thoughts here on Titan fundamentally?
Fundamentally, there will not be any headroom left for the Titan, at least for next 2 quarters. So if one has a long-term view, one can hold on. Maybe it will remain concentrated between 10% here and there. But the results will not have any positive impact on Titan stock price, at least for next 2 quarters.
Okay. Aditya Kaushal is asking for an outlook on the hospitality stocks like Lemon Tree and Indian Hotels. Shrikant Chauhan joins in with his thoughts on this conversation. Shrikant, we'll get to the index and your ideas as well, but since we are asking for some queries right now, can you give us a view on Lemon Hotels and Indian Hotels? Lemon Tree and Indian Hotels?
Yeah, good afternoon. See, the way there is a structure of Indian Hotels and Lemon Tree, one thing is very clear that somebody must have taken exit call from both these counters, because it was at 130 levels, Indian Hotels. And from there, all the way, the stock has fallen to the levels of 70. And it's not that the stock was performing extremely well and then it has fallen. It was not at all performing, and after that, it has fallen. So one thing is very clear, that somebody has taken exit call. So it is better to exit even at this price, and it is better to enter into those stocks where we can see some more upside in the medium to long term. But certainly at this price, get out of, I'm to say, exit out of long positions from Indian Hotels as well as Lemon Tree.
Okay. Now, Sapna Samal's question is the most interesting one. Part one and part two, she's asking, of course, whether has the time come to switch to pharma. But I think the actual query is that she's been holding on to HDFC since the time of the IPO. And she's asking if the time has come to switch out of HDFC into pharma stocks. Sapna, my simple recommendation would be that if you understand the pharma business well and if you believe that the pharma business can show better growth than the premier housing finance institution, then sure, it makes complete business sense to do. But otherwise, these are companies, HDFC Bank, a couple of others, which have lasted multiple cycles and have emerged only stronger. And therefore, unless you know the pharma business very well that you want to get into, try and avoid doing these things. That would be my simple opinion. But I want to ask Yogesh about an offshoot of this question about whether, Yogesh, is this a time to actually switch some money out of some other sectors which may or may not be doing well into healthcare, into pharma, because the businesses are looking strong for now?
Yes, Neeraj, if somebody wants to invest into pharma, though the run-up has been there in last 2.5 months, but still there is more steam left due to this COVID-19 impact. And the sector is now turning up after a prolonged period of 3-4 years of down cycle. Then it could be a metal or can be from any other sector. One can look at switching and definitely can be looked at as a pharma for next 2 years. But one has to look at which are the available at valuation multiple rather than jumping the bandwagon with a high P multiple stocks at this point in time. So that would be my piece of advice. But yes, can be jumped from metal, which is a cyclical. If somebody is holding into the portfolio, then definitely can be switched from that.
Okay, well, so those are some queries answered. Viewers, we can try and take only as many, but thank you so much for giving us your queries. We'll try and answer as many as we can on a given day. But some closing strategies first. Shrikant Chauhan, I'll come to you. What are the stocks that you would look to initiate a trade on at the current point of time and take them home?
Yeah, Neeraj, see, like right now, what I'm seeing on the screen is that a lot of buying is happening in all NBFCs, especially small size, mid size NBFCs like Cholamandalam Finance or Ujjivan, even Bandhan Bank, which are like catering to some microfinance or some rural side of clients. I think there we are seeing a lot of buying. So the strategy should be to look for buying Cholamandalam Finance, which is currently trading at 151, 152. Here we should look for adding long positions with a stop loss at 148, and we can expect 160, 162 on the high side. At the same time, I'm seeing a lot of activity in auto companies. So something I think looks like that someone is taking more interest in auto as well as NBFCs, which is like going parallel. So here we like Hero Motors, which is going up or which is trading comfortably above the mark of 2000. So with the stop loss at 1980, we should look for adding Hero Motors also to our trading portfolio with a target of 2100 on the high side. And I think it's a trade for next at least 2 to 3 days.
Interesting. Actually, you know what? Escorts, and I mentioned about this stock at the start of the show. It looks like there is some buying that's happening, and the volumes give away a bit of a story there. 3 million shares traded today. Amar, before I take in your top closing strategy, a view on Escorts?
I would say Escorts looks positive on the charts. So, but what we are seeing is that it has been in a consolidation zone because it's unable to breach the 750, 760 zone. But again, on the downside, it has got very strong support coming at around 660, 670 zone, but with a positive bias. So yes, this stock can definitely be looked at a buying opportunity, but look at booking profits around 750, 55 levels, because till the time we don't see it breach the 760 mark, the stock could trade with a positive bias, but in a consolidation zone.
Okay, what about your top closing strategy?
I would say from that perspective, one can look at Tech Mahindra. Because Tech Mahindra, I would say, is looking positive on the daily charts. On the long-term charts also, it has taken strong support. On the hourly charts, it's formed a very strong candle pattern. And also there's some bullish divergence. So this is one stock one can look at from a very short-term trading perspective.
Interesting. Actually, HCL Tech numbers tomorrow. I wonder if that is looking strong as well. Would you, I mean, there is a results risk, yes, but do you like, Amar, would you trade HCL Tech?
Yeah, looking at HCL Tech, I would say HCL Tech is also strong on the chart. So, but it has got some resistance around 530 odd levels. So if it breaches that level, then yes, the stock can rally towards 555, 560 levels.
Okay. Yogesh, before we thank you, your top investment idea currently, are you investing money at all or are you staying put?
Very selectively, Neeraj, yes, I am investing, and I think M&M we have spoken earlier also, and today also it is up. I think on this MSME cycle and the announcement of the package, this M&M can have more steam left, and further 10% upside could be there for that. And in that context, as I mentioned, L&D Finance, or in terms of in the other name is Ujjivan. These are the names I am looking at currently to invest for the investments.
Okay, we'll leave it at that, Yogesh. Thanks so much for taking the time out and being with us. You know, autos,
Always.
NBFC, the other pocket is real estate, which is looking very, very strong. Shrikant Chauhan, Oberoi Realty or Godrej Properties, do any of these look good for a trade?
I think, see, all these stocks are making lower lows on a regular interval. So they are not showing any specific strength. But yes, if really like somebody want to take any specific call because a lot of rate sensitive stocks are doing well, then in that case, I would prefer Godrej Properties, which is currently trading at 601, 602. And Neeraj, if we track volume of this particular counter for last 15 days, then they are much above their average high volumes. So it shows that someone is taking interest, but the stock is not performing or maybe participating. So it's a buy at this price. We should look for keeping target somewhere close to 670, 680, which is 10% higher from these levels. And the stock is forming the same rectangle formation. So we can keep stop loss at 580 to add any long position.
Okay, just wondering, one quick chart check, Amar, on Interglobe Aviation. It's been very, very stubborn in not going down. Can it go up?
Yeah, looking at Interglobe Aviation, what we are seeing is that on the daily charts we are seeing positive and bullish divergence. So, and also one of the technical indicators clearly shows that the downside seems to be definitely capped around the low that was made around 784 on 23rd of March. However, on the upside, the stock has got very strong resistance coming around 1000 to 1050. So there is a possibility that we could see some upside, but technically looking at the long-term charts, they still continue to be weak. So it's more of a trading play. Upside should definitely be looked at booking profits.
Okay, upsides book profits. Keep that in mind. And Bajaj Finance, 5.5%. We are ending almost at the high point of the day. Very quickly, Shrikant Chauhan, 30-second answer. HDFC Bank, would you carry home long positions?
Yeah, I think we should, because today all these financials are really doing well. ICICI Bank, HDFC Bank especially did extremely well, and it is closing above the highest of the previous day, which is positive, technically positive. So it's a buy. I think the stop loss we should maintain around 920 levels.
Trading at the highest point of the day, viewers. That's the key thing. Okay, let's start wrapping up the markets very quickly. About 1% higher for the Sensex, 2.5 for the Nifty Bank. Look at stocks like Mahindra & Mahindra, Bajaj Finance, HDFC Bank. That entire bucket is doing very well. Bharti Airtel at 545 is really rocking the charts. There's strength in HDFC, strength in Hindalco, strength in Bajaj Auto. So there is merit in those names. Bharti Infratel is down about 5.6%. ITC about 5% lower. IOC about 2.5%. BPCL about 1.5%, TCS about 1.25%. So those are a few names that are languishing in trade. The broader end of the spectrum peppered with gains to the NBFCs yet again. So Chola Finance, Shriram Transport Finance, RBL Bank ahead of the numbers is up and about, trading really well, about 8% higher if I'm not wrong. The last time I checked is RBL Bank. But the star of the day has to be NIT Technologies. Strong results they of course asked for change of the name as well, but really strong show by NIT Tech. RBI Bank at 133, as I said, packing a punch. Persistent about 7.5% higher, doing okay as well, trading at the highest point of the day. ICICI Prudential, HDFC Life doing okay, Shriram Transport doing okay. So a clutch of these names looking very, very solid in the session. What is not? HPCL 6% lower, Kalpataru Power 5.5%, ITC about 5%, Sobha about 5%. Tata Power about 5%, J&K Bank about 5%. So those are a few names that look slightly wobbly in the session today. But all in all, not a bad day of trade, you would have to say. Very choppy, very volatile, but ending in the green. Let's see if there is a package in store for us in the next couple of days or no. But final thoughts, just looking at the way the market bounced back today, and the world markets don't seem to be too bad. Shrikant, is there belief that we could actually head higher from 9,300 levels, or do you reckon you would be a seller at those higher levels, maybe 9,400 or thereabouts?
I think, see, the market recovered today mainly because it was very close to its 20-day simple moving average, and all the way the market has fallen by 900 points from the highs of 9,900. So I think that is why we are seeing some rebound or bounce back sort of activity in the market. So it's a pullback. We may even see the levels of 93.50, 93.70 on the higher side. But tomorrow, in case if we see the market is opening above the level of 93.50 because of any reason, then in that case, lot of short covering is not ruled out. So 93.50 is the immediate resistance. So that is why it is advisable to hold from taking any long positions. But in case if we see the market it starts sustaining above 93.50, then certainly on the day of weekly expiry, we can expect some short covering.
Okay. What about you, Amar?
I would say technically short term the indices are looking positive. So, but on the medium term, long term, they are very negative. So that's the reason we are seeing these choppy trading sessions. As far as levels are concerned, for Nifty again 9350, 9360, that's a very strong zone of resistance. And if that is taken out, then we could see a rally towards 9450, 9460. So 100-point rally could be witnessed once 9350, 9360 is taken out. On the downside, yes, now 9100 and 9200 zone is acting as a very strong support zone. But one, I would definitely say that needs to be cautious because we'll definitely see increased volatility going forward as well.
Okay, gentlemen, appreciate you taking the time out and joining us today for your perspectives. Thank you so much for your time. Okay, and as we wrap out this conversation, viewers, let's get you one more market voice and hear out what he had to say. Ajay Srivastava of Dimensions Corporate Finance spoke to us earlier and said that the pain on banks will keep on getting higher unless the government gives special stimulus. He, of course, adds that agriculture and agri-related companies might be the standout investments in the current times. Listen in, and thanks for tuning in today.
Whatever happened in the last 72 hours gives me a great amount of strength to my conviction that we got serious problems ahead. And the reason I say 72 hours is that in the last 72 hours, instead of there being a stimulus given to the economy, all the state government and central government put together have levied a charge on the economy. So, instead of giving us 100 rupees, they're taking a 500 rupees out of the system. Now, when that happens, it's going to pinch everybody's pocket. The purchasing power is gone from the system, which means that the banking system, which should have got some help from the government in terms of fiscal stimulus, then people have money to look after the needs or pay the EMIs or loans, or the companies get money to pay the loans. This is going the wrong way. It's going exactly the opposite way it should have gone compared to the rest of the world. So when you want to go this path, which is reverse in the rest of the world, you are looking for a train wreck. It's not that it's going to happen. It is inevitable it's going to happen because now you turn all policies upside down that in the stress the system more, which means that who will take the stress? The stress will be taken by the bankers at the end of the day with NPAs or moratoriums or so on and so forth. So I quite concur the fact that the developments are very, very disturbing. And if this continues, we are looking for a much bigger train wreck. And a lot of people, I think, have talked about the bank and so on and so forth. The problem with the banking system is that it's an industry which is leveraged 8 times or maybe even 9 times. Now, you can imagine if you borrowed 9 times of what you have, and the people who deal in future market can well understand what I'm saying, how so easy it is for your margin to disappear with 10% of your loans going bad. So this is an industry which will need to look for more capital. So not only for stock market investors, there is a problem, but also I think most banks will have to raise capital in the next 12 months with whatever that means to the share price, but it's going to be a really tough ride now.